Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003. We've been providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here with our mean reversion systems, and of course, more recently, our KISS trend following systems. Since we've had the new year, some of these systems have started to close out a bit, locking in gains. For example, Boeing closed out locked in a 17.7% gain. You can see the Dow 30 stocks. A lot of them still have nice profits with smart trailing stops in place. But again, very awesome resource. You guys should check it out in the systems area. KISS STS tables. Okay, let's go and get back to this newsletter recording. It is January 3rd, Wednesday. It's in the new year. Happy New Year. And let me get this recording started for the backend website. Again, hello everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, January 3rd newsletter. Hope everyone's having a nice new year so far. And anyway, we'll go and get started here. Got a lot to discuss. So this newsletter is divided into 6 major sections. Didn't really add any new trade ideas. We've had a lot of trade ideas on the website. Last week I added some inverse ETFs, and yesterday I mentioned SDOW. That's the ultra inverse ETF for the Dow. I said that looked like it was poised for a rally and a good hedge for longs. If you had longs you didn't want to sell, and there's been nice movements up in there in those ETFs this year. Anyway, as far as the market, again, here's what I discussed on the weekend extensively. But, the market is so far pretty much done what we were looking for. As you know, we talked about that huge rally that we had last year from the late October lows into late December. And what I've been stating is that likely we're going to see a pullback correction starting in January. Okay, so for one, you had a lot of people that just didn't want to sell positions to lock in gains, pay taxes in December for 2023. Well, with the new year, that mentality passed, and so you have players that have been locking in profits. The market was very overbought. You had multiple points of divergences, and also, as we've been stating, liquidity. And the market moves with the liquidity, guys. How much liquidity is in the system. So we have a couple sources that we follow, Steve in particular, and liquidity was scheduled to be negative from the new year until about January 12th. And so far, we've seen a nice market pullback. Also, guys, today was the FOMC minutes, and they were far more hawkish than Powell's recent comments. Remember, he was pretty dovish last time. Well, they were a lot more hawkish this time. They dialed that back. Another important thing, guys, we had symmetry breaks, confirmed symmetry breaks on the S&P and the NASDAQ. What I mean by that is from the October lows, 80 points was the largest pullback on the S&P 500. Well, with today's move, we're now 96 points off the high. That's a confirmed symmetry break. Again, the Qs also broke symmetry. Now, typically when you have a symmetry break, that puts extremely high odds at the next rally forming a lower high. You can kind of think of it like an ABC type of thing. So sort of like A down, symmetry break, lower rally, lower high, rally, B wave, and then down again. How these unfold a lot of times. We are looking for this pullback to be bought, but we had a symmetry break. So because of that, I'm looking now for potential for a lower high on the next rally. And another big support area is the 4600 area on the S&P. That'll likely be tested over time. Another thing, some of you may have heard of Tom McClellan. He invented the McClellan oscillator. On his Twitter page yesterday, he confirmed that the NIMO closed below the zero area. And after a divergence, that's usually a pretty good signal. And I'll be discussing that in the newsletter later on. But anyway, let's go ahead and get started here. So item number 2 shows the index sector table, what transpired I had to refresh this. So here's the index sector table, what transpired this week so far. So you can see nice decline on the indexes. Dow down about 0.75%, S&P 0.8%. Russell's really been taken on the chin, down 2.67% in one day. That's a big move, down 3.25% for the week. Out of the 21 market sectors we follow, only four were up. They were drugs, utilities, and the energy sector. Okay. And here's the moves for the week. Currency wise, as you know, we've been talking about the US dollar being very oversold. We were looking for a bounce last week, and we've had a nice rally so far in the dollar, up 0.3% today, up 1.2% for the week. That has caused weakness, especially in the precious metals area, which we expected to pull back there as well. Cryptocurrencies, as you know, they broke out on the weekend. They had a move up yesterday, and then they've reversed suddenly. Not surprised to see that, but big old reversal here. The cryptocurrencies, the crypto stocks got hit hard, hammered yesterday, but today they bounced initially off their 20-day moving averages as we expected. As far as commodities here, the index itself, the DBC, was up 1.3%, largely due to crude oil. Energy is a big component of the DBC ETF. You know, net gasoline up 3%, natural gas up 3.8%. Otherwise, a lot of the other commodities were down: copper, agriculture, wheat, and of course, precious metals continue to take it on the chin. Gold down 0.8%. Silver is much more volatile, down 2.7%, down 3.3% for the week. GDX, the miners, they've been leading down. Remember, the stocks lead, guys, and they've been leading down. We pointed that out about a week ago, and they continue to lead down 4% for the week already. And as far as the bond area, 10-year was down today. It's bounced the last couple days, but pulling back today. And TLT 20-year bonds up. Next, item number 3 shows the economic news calendar. As I stated, today we had the FOMC minutes, and they came in far more hawkish than Powell's recent comments. So they walked back some of that, not surprising. I mean, do any of you really think inflation is completely done and tamed? I don't. Tomorrow, Thursday, we have ADP, employment change, initial jobless claims. They all come out about an hour before the cash markets open. We have the S&P services PMI, natural gas inventories. And of course, Friday, being the first Friday of the month, we have the non-farm job payroll report. We also have factory orders and ISM manufacturing. All right, guys, let's jump to those index charts. First chart below, item number 4, shows a daily snapshot of the 5 key major indexes. So again, shouldn't be a surprise to see a little pullback here in the market, guys. We had such a heck of a run from the late October lows, especially on the Dow. I mean, it never even lost the 9 EMA. Finally losing it today. Now, a very simple rule, and it works pretty well, guys. Whenever you break the 9 EMA on a closing basis, not an intra-bar move, on a closing basis, you almost always test that 20-day moving average, which is the middle Bollinger Bands. Okay. The S&P, that lost it yesterday, as well as the Qs. And of course, they tagged their middle Bollinger Bands, 20-day moving averages today. The NASDAQ itself is weaker. It's below it. And of course, especially the IWM Russell 2000. Next. Image number 5. Here's a chart of the Dow. Again, it just, this 90-degree slope up, which is unsustainable. Finally losing that 9 EMA today. Obvious RSI divergence, very wide moving average ribbon, some MACD divergence. So pulling back, again, I expect at least a tag of this 20-day moving average here. The problem when you have moves up like this, guys, you don't have a lot of support areas. You get your support areas or resistance areas from consolidation patterns. But when you just have straight moves up, you have very little support. Next. Chart number 6, here's the S-Dow. That's the 3-time inverse ETF, leveraged ETF for the Dow. I mentioned this yesterday in our trading community. I said, with the Dow so extended, this looked like your low-risk short. And starting to move up here, you can see the MACD moving up. You have a divergence here. You have a divergence on the RSI. So moving up nicely. Next. Chart number 7. Here is another chart. I thought I had a intraday chart, but let's move on. Chart number 8, here's the S&P. This is the weekly chart. Remember, we ended with that doji candlestick. Yes, we did not tag the all-time highs. I do expect eventually we'll rally back up and tag those highs. It's like a magnet. We got pretty close to it. But remember, the big support area we've been talking about is around this 4,600 area. So this may be an area to test over the next week or so before we get a rally back to new highs. That was previous resistance. It's now major support. Next. Chart number 9, here's the daily S&P. Again, like I said, all these look similar. You had your divergence at the highs. And pulling back, we lost the 90 EMA yesterday, so our initial target was the 20, which we tagged today. And you can see this area, this 4,600-ish area. It was previous resistance. It is now big support. Okay. There's not a lot of support down here until you get to this area because of this straight up move. Next. Chart number 10, here's another daily view of the S&P, and this is a time symmetry. So we had that 42 bar move up from 2022 from the October area to December. And interestingly, how we had the same 42 bar movement up into the end of the year, 2023, and now we're getting a pullback. Next. Chart number 11, here's the KISS system for the S&P. Again, I have a couple versions I've been showing of this one. Again, these all went long nicely in late October. One has a very tight smart trailing stop up here at 46.98. I mean, it's almost certainly going to be hit. It's above the ATR. Remember, we had very wide moving average ribbons. Whenever the ribbons get too wide, like you see here in December, like you saw in the October low, you're due for a big reversal in the market. And but again, this smart trailing stop here, again, this trade is nicely profitable, but it's pretty tight. If you don't want to get stopped out, I have a wider version. That's what I'm going to show you next. So image number 12, here's the wider version of the KISS system. It has the stop at 46.13. Now, which one statistically has the better stats longer term? Actually, this one does. Okay. But again, you could use either one, or you could use a combination. You could say I'll use 50% for the one above. So if that exits, I'll exit 50% of my S&P position, and then I'll use this one for the other 50. Again, it depends on what you want to do, guys. That's what makes trading trading. There's no one way to do it. People are going to trade different ways depending on their risk tolerance, personality, etc. You just have to decide yourself. But we give you the tools, and you utilize those tools on your own. Image number 13, here's the 4 time frames we like to follow: the daily, half day, 130 minute, and 78 minute. And again, guys, remember I've been talking about these A's. I talked about that on my New Year newsletter. So that's amateur buying. It indicates very low volume, small bids, etc. And you can see that ended up marking the top conveniently right up there. We're getting a nice pullback. We're still above that ATR, which is a support. We lost the ATR in the other time frames. We have to mark 9 here in 130 minute, but we're below the support cycle. And that end of bull cycle in the 78 minute really played out. Let me show you an educational piece on this. So chart number 14, here's a 78 minute chart. Now this is the Qs, but it's the same on the S&P. I just marked up the Qs earlier. I posted it to our subscribers on our trading community as an education. But the cycle indicator, and again, you can find versions of this on TradingView. We have a custom version, but they all work similar. It's kind of like an Elliott wave type of indicator. It's not perfect, just like any indicator, but it works pretty well. So for example, whenever you break through this, the cyan or the magenta color, that's resistance cycles. Cyan is your support cycle. So whenever you strongly break through a resistance cycle, that tends to signal a wave 3 move. Remember, in Elliott wave, that's your trending move. Looks like I got a typo here. So whenever you break through that, that signals a wave 3. Then your next pullback where you get a support cycle, that signals a wave 4. And then you get your next resistance cycle is a bull into bull cycle. And that's where the indicator attempts to define a wave five, and that ended up playing out beautifully. Look at that. I talked about this last week. You also had a mark 13 up there, so played out beautifully. So it's a very useful indicator for things like that. Again, you can find versions on TradingView. Chart number 15, here's a half day chart. Again, I showed this rising wedge in December and on Monday when I did my New Year newsletter, and you can see that's been playing out. Again, you got your big support area down here around 4,600. Because we had a symmetry break here, I'm looking for a potential bounce soon, but a lower high. Then maybe we come down again, and that would be a good area then to finally attempt another rally to test those all-time highs. But otherwise, logical pullback here. Again, this big candle here, guys, you see that? That really offers no support when you have something like that. Your support really isn't down until you get into this range. Next, chart number 16, here's that 60-minute chart I discussed on Monday. Remember, since the October lows, the largest pullback was about 80 points. Okay. Well, now the pullback off the highs at today's lows about 94 points. That's a clear break in symmetry. That's why I'm looking for the next rally to potentially form a lower high. Next, chart number 17, here's a 30-minute chart. Remember last week we were showing that rising wedge. It's obviously been playing out nicely. You got kind of a shelf support right here. I don't have it drawn in the chart, but you can see it. And again, if that's lost, there's really no support right here. So if this is lost, you'll get a hard move down probably to this area, 4,600, 4,650. Next, chart number 18. Here's a 30-minute chart. So you can see this channel that I showed on Monday as well. Obviously, that was broken. And you got a support zone right here. But again, if this is lost, then again, I think we get a quick move down to at least this 4,650 area and maybe even down to the 4,600. Finally, chart number 19, here's a 5-minute view, just showing the steady chopping move lower that we've had over the last several days. Next, chart number 20, here's the Qs. This is a weekly chart, down 2.7% already for this week. Remember, we ended 2023 with that extended doji candlestick. That had my attention. I stated that you could have taken a low risk short on a trigger 1 penny below that candle with an immediate stop right at the highs. Well, you would have triggered this week, and now so far this candle is starting to confirm a bearish evening star pattern. Okay. Otherwise, this has a potential wave count. The one count here would have this high maybe be on a wave 3 of a larger wave 5. So this could be a wave 4 pullback. Next, chart number 21. Here's the daily. Again, we had the divergence at the highs, pulling back. The Qs are now below their 20-day moving average. That's important because this sets the stage now for a potential move down to this 50-day moving average. Again, I know that's very simplistic, guys. Remember, when you break the 9 EMA, you almost always test the 20. And then if you break the 20, then you almost always test the 50 over time. Okay? Just a very simple rule. It doesn't always do that, but it works out more often than you think. It's a very good guide. Next. Chart number 22, here's the KISS system for the Qs. Again, no changes here. We did close below the ATR. STS current stop is 394.60, so we still got a little bit of room. System went long on October 31st for a very nice entry. So even if it stops out there, will close out a very nice profit. Again, the nice thing about the KISS systems, it's kind of like insurance, life insurance for your portfolios. Next, chart number 23, here's the 4 time frames. Same as I've been showed on the S&P. Again, you had the 3 A's at the end on the daily end of the year. That's obviously playing out. You also had a 9-13-9 move and in the mark. That usually is a pretty good signal. That's playing out. Again, you had the very wide moving average ribbons, just like you had back here in even November, and then you had at least a consolidation. You had the wide moving average ribbon at the October lows. So very useful visual indicators. The 78-minute, you had that same end of bull cycle that played out. Next, chart 24, here's the half day chart. Again, similar look to the daily. So far, pullback off the highs, 15 points. The previous largest pullback was 11.5. So that's a clear break in symmetry. So that is why I am looking for when this does bounce, get a lower high, then we go down again. Next, chart 25, here's the Russell. So the Russell, as you know, had that moon shot up from the late October lows off that demand zone, rallied up, and it is now coming down quite hard, smashing through that 20-day moving average. Again, there's an open gap here that it wants to fill, obviously. Remember, these gaps are magnets. But again, there's also not a lot of support down here, guys. So, this could have a nice correction. Finally, chart 26, here's a 60-minute view. Again, there's this open gap here. We showed this rising wedge in late December, which is playing out. We have an unfilled open gap here, so that's at least a magnet. But again, guys, remember I talked about is your consolidation area is where you find support. When you have these large candles like this, these offer almost no support. So if you lose this area, more than likely you'll pull back, you'll sell off hard, at least down to this area, because this area is now support, right? But you have no support right here. So that's something to be aware of and a little educational piece on that. All right, let's move on. Look at some of our indicators. So the VIX, as we've been showing, the VIX closed outside its upper Bollinger Band. Remember, the Bollinger Bands have been in a pinched formation, hinting at a bigger move coming. So the next time they close back inside their Bollinger Bands, that could be a little short-term buy signal, but the Bollinger Bands are still pretty pinched here. It was briefly below its lower Bollinger Bands today, but it's outside. Chart 28, here's the 2-hour time frame. Remember, they broke out of this channel in December. I said, watch it to form a higher low over the channel line and to rally up again, and that's what's happened. Chart 29, here's a 15-minute chart. Again, the VIX, again, found support at that demand zone in late December, where it's rallied off of. Next, chart 30, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. Again, remember, we've been showing this was in nosebleed territory in December, but you also had a negative divergence where you had a lower high here and a higher high in the S&P. You can see a similar divergence back there at the July highs. And so far, this is producing a nice pullback. You can see how the percentage of stocks have really started to drop. Next, chart 31. Here's an interesting chart. Really clean chart. I like this one. This is the percentage of stocks that are above their 50-day moving average in the S&P. So you can see in these overbought territories, oversold territories tends to give you pretty nice signals. And of course, sometimes you get divergences that form like you see here at the October lows. Next, chart 32. So Tom McClellan yesterday posted this. The McClellan oscillator closed below its zero line. So what he says here, the oscillator dropped below zero line after 60 consecutive days above zero. This follows a long bearish divergence versus price. The divergence is just the setup, but not the signal. Crossing zero is the signal or trigger, basically. All right. It's not always perfect, but that pointed out. So shout out to Tom for putting that out yesterday. And I have my own charts that I've shared with you guys. So here's the NAMO, that's the McClellan for the NASDAQ, you could see, and the NYMO, which is for the NYSE or S&P. And again, you can see how the NASDAQ closed negative today. NYMO closed below zero yesterday, and you had that divergence there. So yesterday was actually a signal for a short. Let me show you another chart. So chart 34, here's the NYMO itself with the S&P. And again, guys, it's not always perfect, but you have some pretty good signals here in the past. So you can see this divergence that was forming in the NYMO versus the S&P when it was rallying up. But your actual sell signal was yesterday when it closed below the zero area right here on the histogram. So here you had one. You had a divergence forming in July. Finally pulled back below that zero area right here. That was a top. Led to a correction. You had one here. In April, it only led to a small pullback, sideways correction. You had one there in February of last year that led to a nice pullback. So it tends to be a pretty good signal. Shout out to Tom McClellan for discussing that. But we created the charts so that you can pull these out from our newsletters and save them on your own in your browser or stock charts account. Next, chapter 35, looking at bonds. Here's high yield corporate. So they've been pulling back today. Remember, the market tends to follow the high yield corporate bonds. So they lost the 90 MA yesterday, tagging the 20-day moving average today, bouncing off of it some. Next, chapter 36. There's the S&P comparison to high yield corporate. Again, the two tend to move together. You do get divergences sometimes, like you see here. Next, moving to interest rates, chapter 37. Here's the 10-year Treasury yield. Remember, the 10-year put in a major top in late in October around that 5% area. And that, of course, was one reason the market rallied so much. And it got very oversold, which we discussed last week. So we were looking for a move up in rates. And we did get a move up, but so far stalling here at the 20-day moving average. But it is still quite oversold, so it wouldn't surprise me if this does ultimately bounce higher first. Chapter 38, here's TBT. That was a way to play the bounce in interest rates. It triggered basically in late December, and hopefully you took some profits today around that 20-day moving average as you're pulling back a little bit from that now. Chapter 39, here's TLT 20-year bonds. So they've been screaming higher as rates have sold off some from the October lows. Logically today bouncing right off that 20-day moving average, which you'd expect. Next, chart number 40. Here's a monthly chart of TLT. And again, this has been playing out absolutely fantastic. Back in October, I talked about a major bottom here. I said we can count 5 clear waves to the downside into a demand zone. Also, RSI, MACD divergence, everything was there. And especially whenever you see 5 waves, guys. So we've had a nice move up. But I'm looking at this as some sort of ABC. Eventually, this is part of wave A. Eventually, we have a wave B pullback. All right. Again, don't get me wrong, guys. TLT is in a secular bear market now. So I am ultimately looking for this to form a lower high. Next, chart number 41. Here's the yield curve. We just want to keep an eye on it this year. Remember, it's been inverted now for, God, it seemed like a couple years. Still inverted technically. We're going to watch this. Most of the time, your recessions hit whenever this finally goes back positive. But for now, it's still negative. Next. Chart number 42, this shows you some of the major sectors. Again, most of the sectors were down today except utilities and energy. So we'll just take a look at the energy area. Chart number 43, here's a couple stocks. EOG kind of has an inverse head and shoulder pattern look to it. If you wanted to go long, you could put a stop basically right at that low there, that higher low. Or you could also trigger long over today's highs. Next. Chart number 44, ExxonMobil, also kind of an inverse head and shoulder look as well. So your swing stop would essentially go right here at that 99.60 area, higher low. Next, chart number 45, ERX, that's a leveraged play on the XLE Energy. Kind of has an inverse head and shoulder look as well. Chart number 46, here's the daily. Next. Chart number 47, oil services. So remember back in early December, I said it looked like a low risk long trigger off that 61.8 fib off this doji. That produced a nice trade. Now we'll see if this can form a higher low over this 200-day moving average. And chart number 48, XLE Energy. Again, similar look to those stocks and ERX. Next, moving on to commodities, chart number 49, DBC. Big sell-off the last couple days, bouncing back a little bit today, retesting this broken trend line. Next, chart number 50, crude oil. So crude oil, as you know, rallied off that demand zone in early October. Was about 8.5 point move off that low. Is that a possible symmetry break? It's a little bit bigger than the 835, but hard to say. But if it is a symmetry break, then was looking for a higher low. Nice move today. Chart 51, natural gas breaking up out of this coil. Chart 52, copper still in the same little wedge-like pattern. Remember last year rallied off that big 355 support area nicely. Chart 53, DBA agriculture ETF. Remember, we've been showing it in this coil seemingly for the last month, finally breaking that coil trend line to the downside. But you have the 200-day moving average right here, which it bounced off of initially. Chart 54, wheat. We've been showing it as a coil pattern. It finally broke down yesterday, following through today. Again, WEAT is the ETF, so that was a way to play it. I personally didn't play this one. Next, moving on to Bitcoin. So here's Bitcoin. Again, remember we were showing Bitcoin in this coil formation, and it popped out of there briefly, but then it reversed suddenly, very strongly. You had a RSI divergence, extreme MACD divergence, and really, if you redraw the path, more of a channel. Taking a look at some of the stocks, here's Mara. So Mara was extremely extended. It was basically going parabolic. We had it as a long idea back here in November, guys. The KISS system made about, I think, 112% on this, something like that, before closing out. It stopped out a couple days ago. But it stopped out on Friday, I guess, last week. Anyway, but I said, remember, this is a great example. Whenever you lose the 9 EMA, where do you look for a bounce? Off the 20. Today, price opened on that 20-day moving average, rallied off of it. So you could have had here's one strategy you can employ. I don't do it enough myself. Whenever you see something like this, you can look and see where the 20-day moving average is. Go into your trading account and put in a buy limit order right near that 20-day moving average. A lot of times you'll get filled nicely. Now, you can manually do it yourself, but at least for myself, I get busy, distracted, and I may miss it because this event was probably pretty quick. So having that buy limit order in ahead of time, you can catch some of these puppies. That was a nice bounce off that area. If you bought this at the open around the 20-day moving average around 2040 and it rallied up to 2343, that's a heck of a day trade. Chart 58, Wolf, another one that we've had on the list. Again, same thing. Tagged, bounced off of its 20-day moving average. Next, chart 59, US dollar. Again, it's had a pretty nice rally here. Remember we said it was very oversold down here, so it's rallying back up. Moving to precious metals, chart 60, gold. Again, with that dollar moving up, it's not helping gold. Gold, as you know, had the problem with that overshoot up to 2150 back in early December. And to me, whenever it did that, that put a little top in for gold for a while because that needed to be worked off. Moved down, higher low, rallied up, stalling at the 61 fib, now pulling back. Now we'll see where this ends up going. We're right around the 20-day, slightly below it. Otherwise, this 50-day is likely the next target. Chart 61, here's another version of gold. This one has the GDX GLD ratio. And again, the stocks have been leading down over the last week, as I've been stating. This has some potential wave counts, a nested 1, 2, 1, 2. For that, you cannot go below this 1935 area. Again, that's a long way away. But now we'll see. Do we tag the 50-day? Is this some sort of ABC where that was a lower high, wave B? Remains to be seen. But if it's a ABC zigzag, then we may see price, let me draw that in, pull down into this range before bouncing. Again, it can't go below here for that bullish wave count. So we'll see how this plays out. But clearly the rallying dollar, negative for the precious metals. Chart 62, here's the weekly. Like I said, when it popped up on that Sunday evening to 2150, that spelled a top for a while. Otherwise, I do think longer term gold will eventually bust out of this area and go well into the upper 2000s. But for now, it's consolidating. Moving on, looking at silver, big drop today on silver. And chart 64, here's that monthly chart of silver. Again, this is my bigger focus on this. Got a big 4-year coil forming. When this eventually breaks, I want to be long silver for a longer term swing. But for now, it's in the coil pattern. Energy is building. Chart 65, GDX, this is the miners. So this is the weekly chart, down 4% already this week, stalling last week near the trend line of the coil. Chart 66, here's the daily view, kind of wedgish formation. We had that open gap, which we filled basically on the gap down today. Here I drew a little uptrend line near the 50-day. 50-day moving average, it looks like a logical target. Now, if we lose that, then we can go lower. But again, if you went long back here in October or November, those would have been your initial stops, the higher lows. Maybe you have a stop here at this December higher low. Onus is on the bulls now to find support. Chart 67, here's a 2-hour view. Remember I talked about that open gap that was filled today. Here I added an uptrend line, which is approaching, something to watch. And chart 68, BPGDM. Remember it was flat for the last month going sideways. I said this was due to break any day. Finally, it broke to the downside. All right, guys, let's move to some individual stocks, trade ideas. Again, I already discussed the inverse ETFs. So here's NAAS. I mentioned this on Monday. Kind of a lower risk play, wedge pattern. I think it's a Chinese play, but starting to move up here nicely. Good volume patterns. If you're long, put a stop. But you could probably put a stop around today's lows or around that 148 area. Chart 70, SPXU. So remember, we've had inverse ETFs out here for ideas to play a pullback on the market. The SPXU, I put it out last week with that doji there. It's had a nice move up, tagging the first target of the 20-day moving average. And chart 71, here's the 2-hour view of SPXU. The 2-hour view was where I triggered off of. You got a really nice wedge here, MACD divergence. So this would have triggered in late December, and it's moved up nicely since. Look at another setup, chart 72, Peloton. We had it on the watch list here recently as a short. We initially had it as a long, but we switched it to a short, and that triggered yesterday, now playing out nicely. Trail your stops down. Chart 73, GPS, we've also had it on the list. This could have went either way, but it broke yesterday to the downside for potential short. Chart 74, HE, Hawaiian Electric. It's been in this long base forever. Finally triggered yesterday. Gave some profits back today, though. Chart 75, Y Yen based. This is the 3-time leveraged ETF for China. I've had this on the list for the last week. I said the China market looks a little lower risk now. There's lots of leverage way to play it. Make sure to have a stop in place, run that low. And chart 76, FXI, if you don't want the leverage to play, you could use that one. I own both of these personally. Next. Oops, some of these charts got out of order. I apologize for that. So this is the 2-hour view of the Qs. I meant to have this up with the Qs. You can see the wedge that was there. So, all right, guys, that'll do it. And we'll see what happens tomorrow. Let me do a quick check on futures here. So ES futures tonight are up about a point. Again, we're quite oversold here very short term, but because of those symmetry breaks, I am looking for a potential lower high on the next rally attempt and then move down. Okay, again, appreciate everyone's support and patronage, and happy 2024. Let's make it a good year. Take care.